Good afternoon, everyone. My name is Christian. Today is Friday, May the 6th, 2016. We'll be looking at a couple different markets today, starting off looking at Canada, the Toronto Stock Exchange, and then we'll go on and look at the U.S. markets. Okay, so this is TSX. It's a 6-month chart. Each one of these candlesticks represents 1 day of trading activity. Let's have a look at this. The main thing here is that you had a really bullish move. It started back here. Actually, it started back here, but this is, you got your bullish cross, your short-term moving averages here, and we're going to talk about this time period right here in order to understand this time period right here. Okay, and I'll draw it out for you, so bear with me. Okay, starting off, we had the massive sell-off. Right, you had high point here, lower high here, and so forth and so on, lower high here. The main thing at that situation, you don't want to try and call a bottom until you have some reason to think that the bottom is in, and what we use for that is a divergence. Okay, it's when we have something telling us that we've overshot to the downside. So how we found that last time around was looking at the force index. Okay, we're going to draw this out for you. All right, the force index, you'll notice right here. Okay, and it's that light shaded blue area that you see in the background behind the price activity. Okay, so you have this high point here, right, and then you have this high point here. Same corresponding time period, you had this high close right here and this high close right here. So if we draw a line between the high points, we can see high here and then high here to high here. They're not in line with each other. Okay, so what we're seeing here is what we call a bullish divergence, telling us that the price is overshot to the downside. It has room to move to the upside to make this up. See, our force index is telling us that the price up here should be above this point here. That's why we have that, right? So what we do is we set to watch for the opportunity. Now, in this situation, whenever you see that, you also want to get confirmation. Just one indicator telling you you have a bullish or bearish divergence can get you in trouble. So try to get confirmation. In this particular case here, you get the high close, right? And then you have the corresponding time period on the MACD, and then again the lower high close here, and corresponding time period on the MACD. Now, when you look at this, you can see that MACD was actually trending up between these 2 points, while at the same time period, like I said, it was trending down on price. So this is confirming your force index. It's important to take note of that. Now, finally, the last thing I want to bring your attention to is the current time period, right? When we're looking at this right here. When we look at this, we see that we have a high point here on the force index, lower high point here on the force index, right? So it's trending down, right? What's price doing? High close here, higher close here. It's trending up, right? So now we have the exact same thing that we had over here, only it's completely inverted. So we're no longer confident bulls in the situation. Back here, we felt real confident, right? We had this nice little sell-off and then bounce up here. We started to sell off again. And we noticed that we have a divergence. In the same time period, this pull-off here is giving us hammer candlestick formations, a nice signal for a reversal. We'll also get a higher low from this point here to this point here. So it's trending up, starting to show the signs of a potential reversal. All this is making a lot of sense to us. Right here is when it runs out of steam, okay? And you could do different ways of trading out of that, but the main thing to point out here is that you now have conflicting news telling you that you have a bearish divergence while prices continue to move higher, and it can continue to move higher, but it's not safe to be a buyer in this situation. So I don't want to play with that at all. I also take note of the confirmation, the high point here on the MACD, followed by the lower high on the MACD is trending down, right? Same time period, price is still trending up. I don't trust this move to the upside. So yes, I would be stepping away from this market. Okay, now we're going to look at the longer term picture of the Toronto Stock Exchange. This is 21 years. Each one of these, well, it's not counts in the States, but we're looking at a weekly time periods, okay, across a 21 time frame. Okay, so keep that in mind. Now, in this longer term chart, all I want to do is look at it and say, does this make sense comparative to the short term chart that I just looked at? All right, so we know in this case it already does, but let's draw it out for you. So here you have this shaded gray area here. This is your 200 period moving average. Whenever price gets down below that, that's where you're in the bear market territory, okay? And this little dotted blue line right here, this is your 50 period moving average, okay? So you're going to see this guy is going to start crossing below that 200 period moving average, that gray shaded area, right? That's very bearish condition here. We're starting to see that develop here, right? You can't see it over here, but anyway, it's very, very close to that. We just started to dip into that. And then the last thing to point out to you is the actual price activity itself. We can see that the trend is a high point here. Okay, then you go down to a low point, then you get a lower high, and then a lower low. So your trend itself is actually down as well. Okay, so all of this, with even the bounce that we have here, doesn't tell me anything bullish, right? All we have is a bounce after a massive move to the downside. It would make sense to have a bounce. No market moves straight down, right? So the bounce to the upside, it's going to find resistance at the 50-period moving average. That's where we're going to typically find that resistance. And so when we see that the current price activity here has just moved above that 50-period moving average and starting to stall out, also short-term chart showing us that it overextended, it makes sense that where we're at here would start to fail and move lower and back into the bear market territory. So do I want to be a buyer in this market? Absolutely not. Okay, let's take a quick look now at the S&P 500 Large Cap Index, the SPX. In this particular chart, the same as what we've been looking at for the past couple of weeks on various different charts. It's always going to be roughly the same. All charts are basically tracking each other right now. You can see the same bullish overall condition. We had a bullish cross of the short-term moving averages right here, okay, here and here. Right. Again, this is a 6-month chart. Each one is counted for 1 day of trading activity. And you had a nice move to the upside and told you would remain bullish until last item to look for would be a close below this red dotted line right here. Once you had a close below that, then your move would be over. You would no longer see this as a very strong move to the upside. Basically, it's just telling you when you're starting to wane, that momentum to the upside is starting to decrease. Okay, that's the first thing that you're going to take note of there. So that's first into that trade. Now the question here is, should you continue to be a buyer here? Because the price could always continue to move higher, right? Well, that's really not the main question. The main question is, will it move higher supported by everything else? Okay, and so I showed you on the Canadian chart we were just looking at a little while ago, the Toronto Stock Exchange. I can show you the exact same thing here. If you look at the actual force index, you can see the low point here, higher low here, okay? And then the high point here is higher than the previous high. So when you had price activity doing this, right, this little move going on here, yet the force index gives us a low point here and a higher low here, we're seeing a bullish divergence telling us, hey, price shouldn't have overshot, price had overshot to the downside, needed to reverse and go in the other direction. Also, the high points here are telling us that price should actually be testing and beating at this guy here. All right. So we told you way back in the day when this was crossing over here that we're looking for a test of this at level here, and that's exactly what happened. So having all that done, we now look at the current situation. We say, what do we see on this chart now? We see a high point here. We see a lower high here. We see a lower high still. All right. We have a low point here, an even lower point here. What is price doing at the same time period? Price is going higher, higher, higher. Low point, higher, low. So this is not showing the breakdown, it's showing the force index right here. So what I want to know is, okay, is this force index being confirmed by the MACD? First off, I look down here at the MACD and I can see the high point here, lower high still, moving like this. Yes, it's being confirmed. Price activity is overshooting the upside. I don't want to be buying in that situation, so no, I step away from that. One last element I want to bring to your attention is we're going to have a look at the MACD here. Whenever the MACD moves below this zero line right here, okay, whenever you zip it down below that, you have yourself this dark line right here. Okay, the MACD moves below that, you fall yourself into that bearish territory. Okay, the last time we saw that back here, okay, that time period we were still fighting with this little, oh, we're trying to make a run for it and it's not happening, and then boom, okay. So I'm expecting the same thing to just develop right here. Yes, you can still bounce for a few days to the upside like you did back here and try if you will, but as long as there's no actual strong signal for me to get long the actual trade, then I don't take it. If there's no signal to get short, then I wouldn't take that either. You want to make sure you have a strong reason to get involved in a trade, right? Right now what we're seeing is a cross of this short-term moving average, the blue dotted line crossing back below the red dotted line, and that's turned this back in the other direction like we saw back here, right, when we crossed in that way here or back here. Right, this is not telling us to get long. I just want to share it with you guys today. God bless, take care, enjoy your weekend, and be safe.